why. But I believe it's 8 years, nonetheless, no matter which model it is, or 110,000 miles for the 3 and Y. The point is, um, I don't know if you guys saw. There's a famous YouTube video where there's some Swedish guy blowing up his Tesla Model S in the snow, and it's because he got angry because there was some problem with the battery, and Tesla told him that he needed to pay like $30,000 to get a new battery pack because it was too old. And what happens is that once these batteries get old, it's like having an old iPhone. It's like the you charge it all night, and you can only use it for like half to 70% of the day. Compared to normal. So once that happens, once it goes below 70% full charge, um, then Tesla says that you have to buy a new battery pack, and those go roughly for around 30,000. I think once that gets sort of baked into the formula, you'll see residual values fall very quickly.
We saw it happen with the Leaf. I mean, we saw, and part of it is that the Leaf's battery design was shit. It was air cooled, but like we saw, if you look at like residuals on those Leafs, I mean, they just plummeted once people realized what the actual lifespan is of it. Anyway, yeah.
Tesla's definitely in a different class, and but still, eventually, I mean, that's the problem with. That's why they purposely look. If you think about 100,000 miles, the average American drives 14,000 miles a year on average, and that's you do the math. It's roughly 7 years, and so if the batteries usually don't conk out, but if you're not getting it fully charged, who knows? With what they're letting out of the factory gate and what they're not. The point is that people will know already with the bad quality that there are risks in owning a Tesla, and one of them could be the battery pack.
Hey, PowerPoint. I saw you came up. I don't know if you had any questions or comments.
No, at one point you guys were discussing sort of like the economics of like tech companies and top line revenue and whatnot. And I was thinking I might have had a comment, but I don't think anyone wants to hear me when like George Noble is on the line. So that's all.
I got a few more people who want to step up. Where are we at right now? We are, oh my God, it is just at about 105, well below last week's lows. Shit's falling apart. Yeah, any commentary on who and when might be selling would be good. I've got a few more people to come up.
Before I forget, and I might have to be taking off pretty soon. I've got another call. That's really important to get on. But
are you saying this is not important?
This is important. No, but one thing that Brian brought up, which reminded me, is this FSD revenue recognition that they might book. Like it's said to be around $1 billion. And this is what was brought up on one of these Twitter Spaces last night when they were trying to sort of like try to reassure each other that everything was going to be okay. Omar brought up the fact that hey, look, yeah, it was a delivery miss, but there's going to be the $1 billion, quite possibly the $1 billion, FSD revenue recognition. And so these boneheads are so financially illiterate that they don't even understand that it's a one-off non-cash gain. And the point is I think if that happens, I think I mean Brian said that most people will probably see through it. I mean, personally, I strip that right off like I rip it off like a Band-Aid, and it's like and then I think most of the serious people, especially now when Tesla's under a total microscope, they're going to say, well, that's a one-off. Let's strip it out and see how the real numbers compare to consensus. So that's sort of my thought on if they do come out with this whopping EPS number that's way above the street. Wait till whatever documents come out and see if they tell you how much they booked in FSD revenues, if they are able to book it. Like Brian said, PwC may not sign on the dotted line on that one.
Anadarko, and then Richard.
Yeah, hey Motorhead. Question for you. I think you brought this up in a different space. I wasn't quite following along, and then I had to leave. But can you talk about two different things? One is how the Tesla direct to consumer kind of model, if that cuts both ways. So, advantageous, I guess, when things are good, but maybe, only adds fuel to the fire when things are not going well. And then two, kind of the legacy auto finance arms. So, GM and Ford have their obviously their financing uh, uh, arms where they can help qualified buyers, and how you think that might affect Tesla, and if you think that cuts both ways too on the downside, in terms of Tesla, to my knowledge, not having that same capability.
So, Anadarko, what was the first question? I think
Uh, the
Brian Johnson would be the best to talk to address your second question about the finance divisions.
the direct to consumer model Tesla has, and kind of advantages maybe legacy auto would have in a downturn with their dealership networks, and
Yeah,
how maybe dealership networks can eat costs and those types of things.
yeah, no. So that's a great point. So yeah, the OEMs, when they ship to dealers, and they have to they have to ship at a discount to what Tesla would if they sold it to directly to their customers. The point is that to have dealerships, the dealerships really care about two things, like um, you know maintenance repairs, accident repairs, stuff like that, and backroom financing when they do car sales and used car sales. So the dealers are happy to sell it at MSRP or below, as long as they get this steady stream of customers coming in for repairs and stuff like that. Tesla doesn't have that, and in fact, Tesla has massively underspent in the expansion of their service centers, which is why you see all these complaints. I mean, I swear to God, in the past, I would say 12 to 18 months, I have never seen so many complaints. I mean, the more Tesla grows, the more complaints you see on Twitter from angry customers who are like saying, "Hey, what the f, I've been, I've had my car in service for a month, and it came back and it's still broken, and I have to another 2 months, blah blah blah." I mean, day in and day out now these days. So this is a real risk for the brand, is that not only is Musk on the one end destroying the Tesla brand, taking pot shots on every sensitive issue on earth on Twitter in front of everybody's eyes, but on the other hand, he's underspent on the infrastructure that's needed to support the fleet, and people paid good money for this, and they're not getting their cars fixed. Like I said many times before, I've got a friend who's got 3 recall notices from NHTSA, and this is from November 2021, and he has yet to get a service appointment. So that's the downside on the service infrastructure at Tesla, that the normal OEMs won't have to suffer from. But regarding your their captive finance division, how that hurts Tesla, I think Brian's probably the best to answer to that. Brian, are you still there? No, I guess he's not. So basically, what it comes down to is that these GMs, Fords, and Ford Credit and GMAC, these guys, I mean, have a solid track record. They can finance quite easily and whatnot. Toyota finance is, I think, one of the strongest in the world. The thing is, you need a big balance sheet, and you need a big you need to have a good track record, and Tesla does not have the balance sheet to run their own captive finance business, and that's why they're running it. Probably, my guess is through J.P. Morgan, which is like the largest third-party car financing bank out there, and that's exactly what like the likes of Mazda and Subaru do. I mean, they're not big enough to. I mean, they make about one exactly as much as Tesla made this year. They do about 1.3 million units a year, and both of them farm out their leases to J.P. Morgan. They both use J.P. Morgan, and I think Tesla is possibly doing the same thing, or maybe they're not. I don't know, because I think they got into a legal dispute a little while back. But The point is that they just don't have the balance sheet to do it, and leasing is a highly risky business. And I think if you look at Tesla's past, they've done their own forms of leasing. They've done residual value guarantee deals that have like I think it was 2020. I think it knocked off something like $500 million off their revenues, and 60% of that on gross profit level, because they bungled a residual value guarantee deal, which is sort of like a lease, except it's on a bigger fleet scale. So I think they just don't have the wherewithal to do it, nor do they have the know-how on how to do it profitably. And if you look at their lease penetration, if you notice yesterday's production and delivery report, they tell you on the right-hand side what percentage of the S and X and what percentage of the Model 3 and Y was attributed to lease. And that percentage has gone down from like 13% like 2 years ago for the 3 and Y down to 4% today. So it's like they're deleveraging is what my impression is. And the Japanese car makers are saying the same thing. I spoke to them just before year end, and they're all saying that they're switching from leases to loans. Hope that answers your question.
Richard, it's you.
Hey, I just wanted to speak up on behalf of the plucky little Leaf. I leased two of them, and I knew going in that they had massive depreciation, so I didn't buy them. I leased them instead. And the first lease deal that I got, the dealer had a whole bunch of them that he needed to get rid of right then. It was like, late in the month, October, a total stereotypical time to get a car deal. And the first one I got was no money down and $200 for 2 months, for 2 years. For this car, so it was practically free, and it got me out of paying a lot of gasoline, because that was when gasoline was really high. And so I leased it for cheap, and it actually was. It looked like the world's worst grocery getter, but it actually was really fast and handled really well. The i3, the BMW i3 that I had a more sophisticated ride, but the handling and everything with the Leaf was fine. And its batteries, so Tesla's got this big solid glue mass of like 9-volt or little D cell batteries, or whatever they are, in a thing where you have to replace it all at once. With the Leaf, you could plug that thing into the computer. It would test each of the batteries. There were like 48 different it was in groups of 4 or something, but it could test every little cell individually, and then if that cell was out of spec, you could get it replaced. So if you actually wanted to have one of those things and keep it for a long time and baby them, it was doable. So I mean, the design of it looked sucky, but I thought it was a halfway decent car. But I just wanted to chime in and say that. Thanks for this. It's great listening to all you guys and George Noble and everything. I was listening in the car on the way over here. They were talking about Tesla on CNBC, and somebody was saying, "Oh, it's getting cheap at only 28 times earnings," and other people were like, "Well, what are you talking about? All the other auto companies are a lot lower than that." So anyway, all right, thanks. That's all I got.
I got Baron, and then Brad. I don't know how long until you have to hop out. I don't know if you had any final thoughts.
Hey, hi, Buck. Hi, everyone. Thanks for letting me speak. Someone was talking about these leases, and I mean, there is whenever you people look at like one of the bull's cases is that all these legacy auto OEMs, they have large debt on their balance sheet, and most of these Tesla fanboys, they are repeating it ad eternum, that and most of these guys who make YouTube videos also. And my understanding is these big legacy OEMs, they also like have a bank inside them. So like Volkswagen has a financing arm which is called like Volkswagen Bank, And if you look at like their current, I think they must be taking loans from the wholesale market and using that to finance like their customers who want loans or leases, leasing deals on the car financing. But I don't think, I have checked their debt, and I don't think their debt are like stressed or something like that, and they still have good rating from S&P or Moody's. So I don't know. I think, and another issue is like if you look in if you search just all the stock symbols, and someone could do like a group by query, SQL query on the stock symbols which are mentioned in Twitter, Tesla would come to the number one. Tesla is one of the most discussed stock, but there are a lot of bullshit being propagated by the bull thesis also, which is not good. Like this is the bull thesis. Like Toyota has lot of debt and GM has lot of debt. I'm sorry, but most of those debts are inside their financing arms, and you cannot add. If my understanding is correct, we cannot add those debt from the financing arm to on the operational business unless someone can show that they have done like bad lending, they have lent to people with bad credit scores or something like that. So anybody if you can touch on this topic, maybe Motorhead.
I think Motorhead was talking about, and I'll throw it to him. But I mean, I think that's kind of like if you want to talk about, because I know Baron, you're really into like sentiment of your counterparties. I think that's really kind of like what's so interesting is that like you have this story, right? What's priced in is just these assumptions of 50% compounded growth, class leading margins, FSD. But I think that's where you're talking with these people who they will exceed an individual point, right? So you say, okay, well they had to like they had to cut revenues by they had this $7,500 discount, and that's part of like the combined projection. But then they'll say, oh, but they're still growing, and that shows they have pricing power or whatever, or they have room to move. And I'm like, yes, that's correct. I mean, like it's obviously not unlimited, but I guess they can sell more units. But that's kind of what we're saying is that in order for this like bull case that's priced in to be like make sense above like whatever is just hysterical wish casting of the future, you have to assume that like every single portion of the model works out. And so when you point out an individual flaw, they'll just change the argument, but really it doesn't. Like that's, I mean, I try to educate people and help people and discuss through issues, but like if you have to acknowledge that like the bull case requires every single one of these factors to be at the company's projection, if not better, and that if one single one of them fails, that is basically a way gets you a portion of the way to reverting to like a being valued like an automaker. So I'll hand it over to you, Brad.
Yeah, no, I mean the point the gentleman just brought up is a debate I've had with all these Tesla fanboys for the longest time, and it's they refuse to realize that there is a captive finance division in the big car makers like Toyota, GM, Ford, Volkswagen, BMW, whatever, and then there's the auto division, and they refuse. They're like, no, it's all debt. And it's like, listen, they actually break out how much the automotive division net cash or net debt is, and they'll break out what the finance division's net cash and net debt is. Okay, so I mean, to give you an example, Toyota last fiscal year, the reported net debt was some like obscene number. It was huge, and it gives them a really high debt number. But if you look at the disclosures, they break out what the automotive and the finance division debt levels are, and it turns out the automotive division is actually net cash to the tune of $40 billion. That's a pretty large number, given that their market cap is only about 220 billion. But the point is that and also the debt on the balance sheet for the finance divisions of these car makers, is basically backed up by the cars that they've leased out or loaned for. Now, the reason they can do this at such a profitable rate, and mind you, during the chip shortage, most of the big car, like the Subarus and the Mazdas and the Teslas, and the ones who think they can do it, blow up, like Mitsubishi Motors. So it's a complex business, and you need a big balance sheet. You need big revenue scale and whatnot. And Tesla just hasn't gotten there yet, and that's why they only have like about 4% of their sales leased out.
So someone DM'd me, Brad, and I've forgotten that Cubico had done this. Cubico did a piece called "Captive Financing Arms: Avoiding Pitfalls and Comparing Tesla's Balance Sheet to Those of Other Auto OEMs." It's a really great summary, really good. So I pinned it at the top there, so that'll cover some of it. But yeah, he did a really good job of outlining why it's a poor apples to apples comparison.
I read that.
Exactly.
It's a great report. Everybody should read that.
Yeah, exactly. But do you, Motorhead, do you see any risk, like from not from the point of view of Tesla, but from the point of view of legacy auto OEMs, where if suppose the residual value of the cars they have leased, because we also have to be cautious that in last few years, if you look at especially the German automakers, as their MSRP on their cars are excessively high, they have been more and more into leasing deals, because most of the people I know who own BMW, they don't own it outright, but mostly through leasing deals. But if the residual value of those cars like fall down, can it impact their balance sheet, at least from the point of view of the captive financing unit?
Oh yes, absolutely, and that's why I brought up the example of Mitsubishi Motors. Basically, what you're doing is saying, okay, this customer has a credit score of this much, so okay, I think if we charge him this much and borrow at this cost, he'll be able to pay back for the car. And then there's the lease penetration, where you say, okay, car prices are here now. In 3 years, they'll be there. And so we'll lease it out for this much a month, and we'll only have to borrow this much, and they'll have to pay that much on interest. So it's sort of like it's a completely non-automotive financial business, and the thing is, Mitsubishi Motors got it right. They were at the point of bankruptcy, and they needed to have Mitsubishi Heavy Industries and Mitsubishi Trading House come out and bail them out. This is back in 1994. Sorry, I think it was like 2001. But the point is that it's a tricky business where if you don't have the scale, if you don't have the know-how, it's something that can blow your balance sheet up. And the great example of that is Mitsubishi Motors.
But at the same time, I think post GFC, I think I suppose they should be reluctant to give leases to subprime customers. No, I think they should be checking the credit scores of their potential customers.
Well, I
Because
mean, they're yeah. I mean, sure, that's more pertinent to the loans that they're making. So they're doing basically two things. They're leasing and they're lending to buy. The lending is actually easier because you've got if you need to repossess the car, you can repossess it. Whereas with the lease, it's sort of on a fixed 36-month basis, and it's just if you miscalculate the price, then the price at the end of the lease, then you run into a lot of trouble. And that's why the captive finance businesses these days have actually lowered their lease ratio and sort of they sort of keep doing the loans, but they've sort of delevered the lease portion of their books. And the loans also they've become very strict. So I mean, you've got people with high FICO scores getting turned down these days, is from what I'm hearing. But so of course the loan terms have become much more much stricter. But the lease penetration is something that's being deleveraged right now because because of the fact that it's very risky, and you can see that in Tesla's lease numbers as well.
Hey, so shifting gears, we've now breached below 105. It's, I mean, the market's definitely not, as a whole, is not looking great, but I mean, this is just brutal. I don't know if anyone had any commentary on that. I mean, it is just. I mean, I figured it'd be down. Some of the spaces, the bullish spaces yesterday, they're like, oh, it'll be flat or like might be up. It was already priced in. So that's kind of that level of delusion. But I mean, yeah, we're sitting at down 15% right now. So anyone who has any insights on anything involving market action, sentiment, please come forward. I don't right now. I don't have anyone pending a request to speak. So sometimes your request just disappears into a black hole. So if you're having problems, just send me a DM and I'll get you up here.
I'll just make one last comment on the price action and whatnot, and then I'll have to hit the road. But the volumes look set to be fairly high today. I would say as high as they were, in the 2 days before it rebounded at the end of the year. So it doesn't seem like that large. You never know until the end of the day. But the fact that we're at I think over a 2-year low right now is probably pretty shocking. And but as George correctly said or noted, was that this company still has a $332 billion market cap, and Toyota Motors is, as of today, is only $227 billion. So I mean, and they only make, I would say, let's call it, only 10% of what Toyota can make. And sure, the profitability has been high up to now, but the thing that you'll see with the legacy car makers, the quality ones, the ones who have like been disciplined with pricing and whatnot, you're going to see these guys come back with a lot of new product, and a lot of them are coming out with rivals that are aimed at the Model Y, and the chip supply is coming back. It's always coming back, but this time it sort of really is simply because the usual chip customers like the smartphone makers, the PC makers, the laptop makers, the game box makers, the demand from those usual customers who've been so strong during Corona, they're all falling off the cliff in terms of demand. So you're seeing greater allocations made to the large car makers. So maybe not by the first half of this year, but by the last half of this year. And I hear this story every year since Corona started in 2020. But you're going to see larger supplies of new car inventory, which is going to really drive down prices. And I've said this a lot of times, but it's very important to know is that most car makers will, because of that, see a rebound in production, and they're happy to lower prices, because when you have volume go up and prices go up, it's basically 75% profit impact from volumes and 25% from pricing. So if prices go down, that's only 25% of the equation, as long as volumes are going up. So with greater chip supply, the legacy car makers will be making, they'll basically rebound. Whether it's a one-off or not, it remains to be seen. But the point is that with greater new car inventory, Tesla will have to lower prices, because the dealers will who have gouged prices up to now. Anywhere from $5,000 to $15,000 above MSRP, they'll have no choice but to lower prices. So the legacy car makers are in a good situation. Tesla's in a very risky situation.
Cool. Thanks as usual, Brad. We'll catch up with you later.
Thanks so much for a great space. This is really epic, and sorry I have to leave early, but catch you all later. Thanks so much.
Yeah, ping me later, man, if you're still up. I bet you're not going to sleep well.
I'll probably be up till the market close.
Brad,
Thanks
Brad,
so much.
Take one last question, Brad. Really short one.
Yeah, sure.
Yeah. What in your opinion, what's the true value of the stock right now? The reason why I'm asking is because I wrote a couple of puts, cash account puts last month for 111 and 115, and the break even was 105, and it's right at there. It's approaching that price right now. But I'm guessing it's going to fall further, maybe even reach the $100 mark. What's your assessment on the true value of the stock as of now?
So, assuming they make a profit this year, so I'm, my guess is that worst case scenario, you could see these guys. I think you see maybe a quarter or two or one big quarter of losses, and then the rest are sort of weakish. I'm looking at about I'm looking at $8.60 in GAAP EPS. Okay. I don't pay attention to non-GAAP. I do, but I hate trying to admit it. But so I'm looking at 860. Let's say that if they have a quarter of losses, the stock will go down. I mean, there will be no bottom because I mean, we're back to from to the early stages when it was a distressed asset. So let's say that fair value is let's give it Toyota, which is like 11 times earnings, right? Then you've got like $94, right? But if they're making losses, immediately the price to book value, which is basically the market cap versus their shareholders' equity, if they start making losses, people immediately will say, screw PER, and they'll start looking at PBR, price to book ratio.
Yeah.
And the average automaker on that basis trades at about 0.6 times shareholders' equity. And once you fall into the doghouse with whether or not you're a going concern or a distressed asset or not, then you start looking below book value. And right now, based on recent quarter price to book value, not price to book value, but recent quarter shareholders' equity for Tesla, I would believe was something like 14 billion yen. $14 billion. And I think that comes to something. It comes to, hold on, give me 1 second here because this is important. We should get this right. Yeah, so it's 41 billion in shareholders' equity, and if you divide that by the number of shares outstanding, that comes to exactly $13 a share. I would say that's about fair value if they make a lot.
Okay.
Yeah, $13 sounds about right to me. I mean, mind you, if you would give that the average of Volkswagen, Toyota, Daimler-Benz, BMW, then we're talking about more like $8.
Okay. All right. Thanks a lot.
And with that, I'll say farewell. Thanks so much, you guys. Really appreciate it. Thanks, Buck, so much.
Thank you, Brad.
Take care.
Thanks, Buck. Thanks.
Oh, I had my human lawyer hybrid guy came up and he's since left. Everyone's abandoning me. Shit, man. I don't know. This is fucking ugly price action. I mean, I don't know. I mean, I expected like a pretty healthy sell off, especially after the bump it got. But I mean, it did not hesitate to just. I mean, it just blew through last week's lows. I'm not like a technical trader or a charts trader or anything like that. But I mean, in the near term, it looks bad. And certainly in the medium term, I mean, like I said, I'm not a technical guy, but I mean, I don't see like any like real support, for another, 30, 40, 50% down. And I have a hard time believing we're not going to get there at some point. But I don't trade this thing. I don't have a position. So, kind of wish I did right now, but I think it's, I feel like I have a clearer head since I don't do that. Yeah, anyone else who wants to come up, have at it. Baron, PowerPoint, anything you want to say, have at it.
Can I just add one thing? I just checked the options chain. I think a gentleman was talking about option selling, because I also do almost same thing. I don't know the name of the guy who was talking about it, but if you look the next year's January puts and look at the option chain, I think the option implied move is like $50. So I think the way it is set up in options market, I think the stock could go to like 50. And I'm also trying to sell some puts, so I'm targeting those levels like 55 or 50, something like that. And the premiums.
That's the 1 year. That's the 2024 contract.
Yeah, 2024 contract. So how I calculate is option implied move is like 85% of the current price. Like current price is 105. So I take the put side and the call side, and I add the premiums of the two, and then I calculate 85% of that. So normally that is a back of the envelope way of calculating option implied move, and that
Hey,
gives
Baron, I got a
around.
question for you. I know I've noticed it, and a few other people have too. Let's talk through the options of, right, this was a meme stock on the way up, and I have seen similar commentary that like, oh shit, puts are printing money. What happens if this turns into like a retail frenzy of like buying puts? I mean, I don't know. Like that's where I would be really scared. And I don't know if you had any like thoughts on that.
I think that is the some of the person who talked about it. Like I think it was George who was saying like it could get like I'm not very like expert from the point of view of mathematics in terms of calculating gammas and venas and all those Greeks. But I think if there is a lot of put buying, the market maker, not to lose money, it would also try to take positions in the same way, in the same direction as that of the market. So they would also try to short the stock to remain in the same direction, not to lose money. That can happen. It happened with AMC and all those meme stocks in 2021. So it can happen.
Okay.
Yeah,
all right,
definitely.
Good. Mishka, what's up? What's up, man?
Hey.
You must be feeling happy today.
Today is quite a day. It's just it's hard to not feel manic when you see like this kind of movement. And I know exactly that feeling on the way up because I actually did the GameStop squeeze as well. So I understand the euphoria, quite well because I definitely felt it in 2021 and I just totally dirt my way into it. But I wanted to get to the what we're discussing right now. I'm pretty sure Michael Burry said in early 2021 when he was talking about his Tesla short, I think it was early 2021, maybe late 2020, but he had said that a gamma squeeze can happen in reverse. And I sort of understand how the gamma squeeze works. I still have a little trouble wrapping my head around it, but I'm wondering if anyone can understand how a gamma squeeze would work in reverse because I don't understand the mechanics.
It's the exact same mechanism, man. It's the exact same mechanism. I mean, it's right. So if you sell a call option, right, and you've got your model set up, and it's you basically you do a certain amount of like hedging at the time of sale, but as the price approaches the especially the stakes that have like the highest volume traded, like what happens is if it approaches that and it goes past it, then the person that sold the call, they have two options, right? So they can either buy back that or they can buy basically the underlying. And what they do is they're motivated with how they're set up. And I don't want to like speak out of turn on the mechanics of it, but like, yeah, I mean, like they buy the stock, right? Because if if you sell a call option, right? So if you sell a call option tomorrow for $120 on Tesla, and it's approaching $120, you can either satisfy that by closing out the position with the exact opposite trade, or you can buy shares, right? So you can buy 100 shares, and you're covered on the upside, right? So because you can satisfy the call with the shares as well. And so what happens is you have basically a positive feedback loop, because the options cause people to buy the underlying, and it goes up, and then once you get past these certain levels, you basically create a snowball rolling down a hill. Is that more price action will bring in more call options, premium on call options will go up, and then the people will buy the underlying, and it just continues on. And like on the downside, it is literally the exact same thing. It is if put option goes crazy and it starts to approach those levels, then your hedge for the underlying is to short more shares. And so that is, I mean, it's literally no different, except for that the market is generally biased to go up with like passive flows. But if retail decides that this is something they want to do and they go hog wild and whatever, I mean, they put a fuckload of money on the way up. And if they're truly like neutral and they just want to see the exciting price action when they discover it, I mean, the mechanism is exactly the same. It is options, and then buying or short selling the underlying. PowerPoint, go ahead.
Two notes on like retail traders. Like the first thing is like something we've seen from AMC and GME is that retail traders are a little weird. Like they have like a really stupid belief, honestly. Like not all of them, right? Just but a decent amount that like you're supposed to have like diamond hands with the stock, which like obviously beats the whole point of trading stocks. Like you basically buy a stock in order to eventually sell it at a profit or whatever. Obviously, you get dividends too, but so like I don't know. I don't know how much retail traders actually think about stocks correctly to understand like, oh, we're going to make money going down. But I do think there's going to be some degenerates in like Wall Street bets. But yeah, I don't know. There's a weird psychology that a lot of retail traders have about diamond handsy sort of stuff. I would say that retail traders are way more likely to long a stock than to like short it for that reason. But yeah, I do think, but like the second thing that I would note is right now, a lot of the thesis that at least, George Noble is no longer on the line, but one of the theses that like George Noble was talking about, a few days ago, if anyone was in that Twitter space, was basically that like, right, like the main thesis for why shorting Tesla is a good idea. This is not financial advice, obviously, but like at least my thesis and George Noble's thesis, well, really George Noble's, is that basically right now, so much of Tesla right now is locked up in retail. And like basically, usually it's the case that if everyone who like all these savvy, investors all agree that like to be bearish on a stock, usually the price will settle, right? Like by the time everyone agrees that the price should go down, the price has already gone down. The kind of the thesis for why this is different for Tesla is because retail traders are a lot slower to like kind of offload a stock that's like not in a good position. So I guess the point there is that once retail actually has a sizable amount of short position, that sort of thesis kind of starts to kind of run dry, right? So that's like the thing I would note right now is that the main reason why shorting Tesla is a good idea right now is because retail traders are going to be slow to sell. There's going to be a very slow trickle of a sell-off among these retail traders, which again have a very high amount of like they have a lot of stock in Tesla right now, right? So even if like institutional investors are bearish right now, the retail investors will take a long time. If retail traders actually start shorting Tesla, I don't know, that thesis kind of runs dry. It's just like the main thing I would just point out there.
Yeah, I think it's certainly possible. I think the bias is going to be long, for not only passive flows but also for retail. And like you said, like retail, they tend to be concentrated more in smaller positions, or they just put everything in the set and forget type fashion. And so they don't have like good risk management. I mean, like that's just a fact, is that they will hold on longer because they will, you will see like a thing. Well, I just got to get back to even. I just got to get back to even. And as soon as you do that thinking, like you're fucked. One thing I always remind people, I'm gonna see if I can try to find a link. I'll post it a little bit later today. Back in like, I want to say this was like 2012 or something. There's like this fascinating story. There was a company called GT Advanced Technologies. It was a company that made basically Gorilla Glass. They had this like specialized patent supposedly to make glass that went on smartphones and devices. And this is right as people realized that anything that Apple touched, just if Apple picked you as a supplier, you were like set for good. And so they took out a bunch of debt to buy a bunch of like foundries in Arizona to basically just make this special kind of glass. And there was just basically like speculation for like a year. Some of it was real because Apple did, go into like a preliminary, talk with them. I don't remember the exact details, but basically there's a long story short, there's a forum that is following these retail investors that were pouring, first it was a little bit, and then it was just like their entire life savings. They were taking out mortgages on their houses in this company that the bet was that Apple would pick them as a supplier and it would skyrocket. And one day out of the blue, the company just they declared bankruptcy because Apple didn't consummate the contract that they thought was this assured thing. And the reason I bring that up is not necessarily to laugh or whatever, but just that those types of behaviors, what we're seeing right now is not particularly new. I think it's a little more widespread. I'm going to try to find a link to it, because if you actually follow like this forum as people are posting in the days leading up to it and as it's happening, it's incredibly enlightening. On a surface level, if you're a nihilist, it's kind of funny, but also you see people just completely destroy their lives. And that's kind of a really great look at, because I think you see plenty of it on Reddit and whatnot. You see some of it play out, but like just that forum is just this really interesting time capsule. So I'll post it. I definitely think it's worth checking out, because retail is they can have a huge difference, especially on the margins for when people.
They had this, and Apple had made this big investment in this company, GT Advanced Technologies, to make the sapphire glass for the iPhones. They had a factory. I can't remember if it was in Nevada or Arizona or one of those. It was somewhere in the Southwest, and Apple had given them a bunch of money to do it, and some of it had been like equity, some of it had been loan. I can't remember. And this company, GT Advanced Technologies, had made big promises, not unlike Musk, about what they could achieve on production, in terms of they were basically saying we can make tons of this really, really strong, great glass, and we can do it at a low cost, and basically they just didn't know how to make this stuff. And all of they would make these big like balls of sapphire. They were called like boules or something, and they would all be cracked, and they had hundreds of machines. And basically they just realized, like, wow, we promised Apple we'd produce all this glass, and we've signed this contract, and they've invested all this money in us, and we've gotten this far. We're a stock with a market cap of $1 billion, and just the whole thing was just like a dead on arrival. They couldn't do it at all. And so without telling Apple, basically they just kind of, once they figured out like, hey, like we just can't make this glass, they just filed for bankruptcy. It surprised everybody. It surprised Apple. Everybody thought that they were this great company, was making, going to make this great sapphire at scale, and the whole thing was totally a lie.
I thought Apple rugged them. I thought Apple had a contractual out, and they were just displeased, and they're like, "Fuck you." I think that was part of it, but I don't remember. I haven't read it in a while, but like but watching the investor psychology behind it,
they
is really
accused GT Advanced Technologies accused Apple of some kind of wrongdoing. I can't remember exactly what they accused them of, but as I remember it, if you actually dug into it, Apple had been extremely patient and generous with them. And
okay. I just remember I thought they unilaterally canceled a contract.
No,
but
Apple lost
this
a
is a long
shitload
time
of
ago.
money actually, trying to make GT Advanced Technologies a success, and they just completely wanted to wash their hands of them when it turned out that they had completely overstated their capabilities. and so Apple ended up not like having nothing to do with them. Which I think was the right call, because it turned out that they were basically, I can't remember the name of the CEO, but he was out, and GT Advanced Technologies ended up getting taken over by distressed creditors who had bought the loans, and I'm trying to remember whatever came of them. I think they had started out in some kind of a solar business, and that like hadn't worked out. It's funny now that you bring this back. There's so many parallels to Musk, because GT Advanced Technology started out trying to do some kind of solar thing, and some kind of materials. I can't remember the exact nature of it, and basically they were totally turned out that was totally uneconomic, and so this whole pivot to the sapphire glass was like going to be like their kind of like their new thing, their transformation. And that's what got everyone so excited. But they had never achieved really success. They didn't have a track record of success, and it was all just a business plan, And it just goes to show you, like, people like Musk, they say, oh, I'm going to revolutionize this industry or that industry, batteries or whatever it is, and they just say it, but it's actually really hard, And so many companies like GT Advanced Technologies, like, they just fall flat on their ass, That's I'd love to see what the retail investors were saying about it at the time. I wasn't aware that that was a big retail stock.
Hopefully someone archived it. I think it was the Contrarian Investor, and it looks like, I'll see if I can find an archived version of the forum. It was just fascinating.
That's hilarious.
Because you could see, because like the thing is like I think it's probably a really good corollary, because like there were like plenty of fraudulent, components of it, and it's like, this was like this potentially big market, and right, so that's the thing, is even if they could have been right, and it could have turned into these huge gains for them, but like it's not every bet, just because you believe in it long enough, it doesn't mean it's going to play out, and so there are things that were like, hey, this could have worked, or this could have, they could say, well, the company didn't tell us what they should have, and it's like, I think that's a reminder that, like, if you look at like what did it say? Like, there was the average. I don't remember. If someone knows the statistic, please send me, because it was like a recent statistic from someone who did a analysis on retail portfolios. It's like the average like individual investor with equities has like 30% of their portfolio in Tesla, which is like fucking bananas. That's the average American. It's something bananas. I don't want to misspeak, but if someone has that stat or chart,
I thought I saw 11%.
Okay, it was 11%, but I mean that's still nuts. I mean, like, that
incredible.
Yeah.
It's got to be the most retail concentration of one stock ever.
Right. So you think about that, like, most people aren't super into it. So you're talking about, probably millions of people that have like, 50, 75, 100% of their like stock portfolio in this like one equity. It's nuts.
What's even crazier. Oh, sorry.
Sorry, no, please.
No, it's even crazier just talking to many people that I know who bought the stock. Like, many of them, like, they're not even Tesla fanboys. They really just bought it because it was going up. They just kind of bought the story, and they're like, oh, like, Elon's this genius.
Apple.
Like,
it's the next Apple.
Yeah, that's basically it. Just like they just kind of blindly, like, I have like I know people from like just my day-to-day life, where like people who I would otherwise think are very smart people, like they're very competent, like sane people, but they just kind of threw their money at this thing because it was just, that was the thing to do. It was going up. People, it's weird. Like, your rationality just goes out the window when it comes to stocks, and I don't understand it, because I've never been the smartest person in the room. So like, it's just strange to me when people who are otherwise like very knowledgeable and pretty thoughtful people otherwise throw all rationality out the window when it comes to something like this. So.
And the most amazing part of all this is, if you look at all the fanboys, most of the time they are very smart people, because a lot of them are from SF working in Valley. So, and a lot of them are software engineers. But I think in current times, software engineers are like dentists of old days, when someone had to do some in like 70s and 80s, like dentists and the doctors, they used to be like the easy praise for all the financial frauders. And nowadays they have been replaced by software engineers. I don't know why, but most of the engineers, they should be like, I myself is an engineer, but like we are taught maths, but most of them cannot even have hard time understanding the basic principle of law of large numbers. And they get like attracted to this theme investing and all those things that they cannot get their hands around. So I was just discussing with a person. He said, "Okay, what's wrong with the stock? He promised like 50% growth rate. We are not 50% growth rate. We are just 40% growth rate." And I had hard time explaining him that it doesn't work like that. The stock was priced with expectations of 50% growth rate. Now, if suddenly you say the growth is not 50% but 40%, the stock is going to get slabbed one way or the other. And when we and sometimes what they say is it's for 40%. So in an Excel they would put 40% for the next 20 years. I mean, if you take the current volume and put 40% and take a growth rate for 40% for next 20 years, you would arrive at numbers which would not be feasible. Like you would arrive at, like, I saw a model where they were modeling like 20 million cars by 2030.
Yeah, and it's
You
just not.
know,
Yeah, that's like where you get like kind of this magical thinking. I did want to point out that at the very top, I nested a very well known. I enjoy some of his cartoons, XKCD, but this one is very accurate. I think that explains a lot of you. You can be very smart and also dumb, or not good at investing. So PowerPoint, have at it.
Oh, one thing I was thinking, kind of on a topic of like retail being late to the party and doing like weird stuff. I think a lot of, I think a lot of the reason why, there's this huge retail flow, it's definitely concentrated, obviously, among people who have like extra money. And so obviously there was you know, the checks that were in got sent over in 2020. There's the availability of like little trading apps where you get to basically buy, trade options without a whole lot of vetting, on your phone. But the thing I always think about, and I don't really know how to think about this really, which is that, so if there's like a tech crunch, if there's like an actual like mass like layoff of tech people, and then they genuinely have a hard time finding like new jobs, and or they have to take like a pay cut or whatever, there's going to be a lot of retail traders, among all these tech workers, right, who have a lot less money, and they might have to dip into, their, brokerage account or whatever. And that's kind of what I've been thinking about, which is, if retail traders put all their money in Tesla because they had a bunch of spare cash lying around because their job was paying them a lot of money, what happens when that punch bowl, i.e. their like salaries, gets taken away from them? So there's like this kind of first order effect right now where, the tech industry is going down because, interest rates are going up, and, now money's no longer free, and all these companies have just like accumulated a ton of debt and they've only focused on top line revenue instead of profitability. And now they have to make all these cuts in terms of their headcount, and all those people who once had a bunch of money, now they don't have as much money anymore. And like, one thing I tried to do at one point, I actually kind of got screwed over by this, but I got out of the position quickly enough. At one point, I decided, I was like, I'm going to short AMC because, I was in a bunch of those AMC spaces, like listening in, and it seemed like a lot of people were kind of, it seemed like at some point, like those people who were trading in AMC would just run out of money. They would have to tap in to the money that they put in AMC and just kind of cash out in order to pay their bills and whatnot. And I just wonder how much of that's going to happen as like a second order effect of the tech crunch, and how much that'll impact Tesla. Because again, Tesla, as someone else mentioned, is the most heavily concentrated in retail stock probably ever. And it's like that's going to have some weird effects. It's not going to be like a typical stock, right? So I don't know. How much
I
are
think
people going to get squeezed?
I mean you're just describing like reflexivity on the way down. I mean
Yeah.
it's like you look at like the ad tech space, right? So you have like Facebook, you know, when they were growing you know, massively, especially like a lot of like these huge ad spends were this like VC money that came in that's just like, well, we need to get your revenues, you know, up. Revenue growth, who cares about profitability, who cares about whatever, who cares about what your expenses are, get the revenues up. And so the best way to do that was to, like, you know, pay whatever Google, Facebook, whatever we're charging for marketing. And so it's and so that creates this like halo effect in the VC world, which then affects like Facebook, which then Facebook stock goes up, and then those guys are buying like, you know, Tesla shares, Tesla cars. And so it's this entire ecosystem. And like that is, I mean, it really is just like it's a reflexivity system, but on the way down. It's the exact opposite. It's the unwind.
Yeah, something that's like so I took like all the financial classes in like, college. I thought I'd do finance and I ultimately ended up just doing tech. Uh and I also, I've like I interviewed at like a sell side quant shop once, and like, after talking with them, it was pretty clear that a lot of what they did was in regards to retail flow. Like they were basically like that's when I first heard of the term like noise trader. I was like, oh, like this is what they do. They just like look at a bunch of like weird retail flow and spreads and whatnot. And I was kind of onboarded onto that. And like it was like really, I guess what I'm getting at here is like I kind of learned finance in a very sort of different paradigm than what I feel is currently going on right now. Whereas like, you learn about CAPM and like the efficient market hypothesis and like it seems like now there's just like a lot of like all that's kind of out the window when we talk about this stock right now. And it's just like really weird, and I don't know. I have to think about this a lot differently than I would like a typical stock. Like it's just really weird. I don't know.
Optimist, would love to hear your thoughts on that.
Yeah, yeah, I think you're right that this stock is kind of singular. It's unlike any other I've ever seen before in so many ways. The valuation, the ownership, the kind of cult behavior, and I think a lot of this volatility we're seeing on the way down is sort of what happens when a lot of people are jumping from one side of the ship to the other. I wouldn't underestimate how many retail people are just selling it right now. Probably a lot, voluntarily and also involuntarily. I think they're starting to
Right.
get pretty desperate.
They're all down. Like, right. So if you look at how many people got into it, and like every person that's bought in the last, you know, what is it now? It's 2.5 years is down. Like that's not nothing. Like that's going to have like a profound effect on when people sell.
Yeah, I think it has a psychological effect because people, I think there's like this investor psychology where it's kind of like this, it's I think the way to think about it actually is the best way is just thinking about it like at the kind of the stages of grief, because losing a ton of your money, like it's like any kind of bad thing that could happen to you, like losing a loved one or losing your job or getting dumped in a relationship or whatever it is. Like, at first there's some denial about the situation, and then, you get angry, and then you're bargaining, and then depression, and then finally there's acceptance. I think that these are the kind of stages of grief, and the only thing that's sort of different about this situation is there's more of I think an aspect of fear as well, because there's this sort of primal fear of like losing your property, your security, your whatever, your savings. And so, I think those are the two mechanisms to understand. It's like, if it's the fear plus the grief. And so, I think we've kind of seen a lot of the stages of grief already with the retail investors. We've definitely seen a lot of denial. I think there's a lot of people who are just like, oh, it's still an amazing company. it's still growing. Like, and those kind of all sound the same way, which is they're like, I don't care if deliveries are 10,000 more or less or whatever. Like, this is going to be the most valuable company ever. So the denial is like easy to point out, but then we've also seen quite a bit of bargaining, which is all the kind of like, oh, Elon Musk like needs to step down, or needs to leave Twitter and go back to Tesla, or needs to leave Tesla and whatever. There's like all kind. You're like, oh, point me to the board and all. Oh, Tesla needs a PR department. Like all that, Tesla needs to do this. The Tesla board needs to do that. Like all this. That's kind of the bargaining, and then there's the anger is we've definitely seen people be like, oh, Elon Musk, like you fucked me, like what the hell. We've seen a certain amount of that, and I think that's kind of growing. I don't think we've yet really seen a full blossoming of the anger stage, but
Yeah,
I think
that's what I was gonna ask. I wonder if that anger and then to an acceptance level, like, is that, do you think that the narrative as a whole, like, I know what you and I will say, like, do you think it's gonna become like a common narrative that it was his fault, or do you think like, because it seems
oh
to me like
yeah,
Musk is doing that thing where he wants to blame like the Democrats or whatever, the deep state pedophiles. Yes,
oh my
you
God,
think it'll settle there?
oh my God, people are gonna get so angry. Oh yeah, people are gonna get really pissed at Elon Musk for sure. I mean, he is gonna be so much more of a villain than he was in the past, and he's going to be a villain to the people who like up to this point or currently love him, and it's because he's going to be, what he's done is even, it's so bad because it's like the lowest circle of Dante's Inferno. It's treachery, it's betrayal. Like Elon Musk didn't just screw these people over; he like betrayed them.
Well, Andy,
He
he
like,
took his bags out. I think that's the one thing that's like, you look at all these like promotional stuff, like the amount of money he's extracted like in cash is just, it's obscene. It's insane. So I don't know. I agree with you, but it just seems like he's a little bit of that like Teflon Don je ne sais quoi. So I don't know. I always try to give him. I always try to kind of get into that. Mishka, you have your hands raised, so have at it.
Yeah, I think what's really interesting about, oh, whoops, I did that by accident. But I think what's also interesting about like the coping and the rationalizing is I feel like everyone's still in sync. It seems like a lot of these bulls, like you look on Twitter, and they're all like trying to team up for some reason. I don't know what that's supposed to mean, but it sounds like they're trying to team up to pump the stock. But like you already see some infighting. I don't know if everyone's going to be mad at Elon. It really depends on what he does and what the optics are for it. I think you'll see a lot more infighting amongst the bulls. I think you'll see hatred amongst each other. You'll have there are people who will never admit that they're wrong. That's just impossible for them, no matter how much truth you put there. There's going to be a certain percentage of people that are so emotionally invested, because remember, this is a cult. I'm not going to say it's cult, like it is a cult. And just for them to ever admit that they were wrong in worshiping some dude, or like or worshiping Tesla as a brand, right? I think you'll see a lot of splintering and hatred towards each other. You're going to see a lot of anger towards short sellers, because there's this idea that shorts are somehow responsible for companies failing in some way, that some people really believe that it impacts the underlying value of a company. And it's not true, but it's a belief, right? I think the hatred will be pretty scattered, when the dust settles. But I think you're still going to have a lot of denial, and you're going to have a lot of people that just don't even want to talk about it. If they were one of those ultra bulls, right? If someone calls them out on it, they're going to avoid that conversation, because that would be admitting that you're wrong. I mean, I'm not so sure that everyone's going to turn on Elon. I think there's going to be a lot of hatred to be passed around.
I
yeah,
want to make it clear that whatever Starbucks Jason DeBolt is working at when this is all over, I'm gonna make a point to go there and order something from him, but because I'm a bad person.
I agree that the hate's going to be distributed. I mean, people make stories, and stories need to have, sort of protagonist and an antagonist. And I agree with you that Elon Musk's not going to be everyone's antagonist, but I do think that he's going to be the most obvious person to direct your anger at. And I think like, there was a guy named Junior who was up here a couple of talks ago. He's been at a couple of talks, and like Junior if you ask Junior, he'll be like, "Oh no, Elon Musk is a great innovator," and you're like, "Well, what about all the bad stuff he's done?" And he's like, "Well, he hasn't been arrested, so he's not a bad guy. Like he hasn't done anything wrong if he hasn't been arrested." And so I think like there's just a ton of people like Junior out there who are just like, "No, Elon Musk is a great guy. He's a great innovator. Like, he couldn't have done anything wrong because if he did something wrong, like he would have gotten arrested by now." And then like what's going to end up happening is Elon Musk will get like arrested or like he'll get indicted or there'll be charges of some kind. They'll recall FSD. I don't know exactly what the thing will be, the legal or regulatory thing that like millions of people like Junior who are going to be like, "Oh, like maybe Elon Musk is a bad guy like cuz like something is happening." And so I
There's
think
going to be a
like there's
lot
going
of
to be a
people that scream conspiracy, though. That's the thing is you're going to have because Elon's already been he's already been incepting that, and so like you're going to have I think you're going to have a lot more people who are more willing to say that it's a government conspiracy or it's retaliation for something, and because Musk is already prodding those kind of people as it is.
Right.
So
I think that's intentional, right? And I think that's a lot. And I totally agree with you. I would just like, but like the thing is like there are people that will defend, George Papadopoulos and whatever that insane General Flynn or whatever. Like, if you can get him to be where it's like only like 10% of the population or 20% of the population thinks he's like the victim of a conspiracy, it doesn't really matter. But like, you don't like that kind of like broad based Teflon. I don't see it happening, but I think no matter what, yeah, you're gonna have insane people defending him. I actually knew there was a blogger. I don't know if that person's blog is still up for like years after Enron would like there were like screeds like about like defending that like Enron got screwed, and they would go into like the comments like on this is like on the blogger.com days, like they're in Blogspot. Like they would go to like people's WordPresses and leave comments anytime anyone brought up Enron about how they did nothing wrong. So it wouldn't be like I think it would certainly be more pervasive with Musk, but it wouldn't be like entirely new behavior either.
I mean, the probability that some of these conspiracy theories are true, I would not put a 0% probability on that, because we all the time we see these things happening. I mean, let's take an example just with Tesla. The way CEO Elon has acted in a lot of ways, like especially in terms of communication, he has done a lot of errors. If Google CEO or Apple CEO would do the same, maybe they would be debarred from doing their duties by the SEC, or they would be punished. Like announcing in the Twitter that company is going to get private and all those type of things. I don't know for which reason he hasn't been investigated or punished for that. But if any other CEO who's managing any other billion-dollar company would be doing same, would do that, they would be punished. So that is also another risk going forward in Tesla. Like on the way up, maybe the regulators have closed their eyes, but on the way down, they would not be so much tolerant. That could also be the thing, because maybe a lot of lawmakers and all those people's important peoples, they are invested in Tesla, but when the stock goes to 50, they would be unhappy, and then they would not be saving him. That could be another thing also.
It's really similar to the SBF thing, right? Like people like have this like they're like, oh, well, he's gonna be protected because he gave money, and so like it invites like conspiracy like type thinking, and so it's not entirely like unreasonable, I guess, is what I'm saying, and he has done a good job. He's put his like fingers in so many different pots. He's basically runs a company that's super critical to NASA space infrastructure, is helpful to the military, and so I don't think ultimately that will like protect him from everything, but it certainly doesn't help, especially when like the stonk go up. But yeah, I guys, I have to do some like actual real work. So I'm gonna let Mishka, Baron, and Optimus, if you guys had any like final thoughts. I'm sure we'll do more of these this week. I don't know if there's anything you wanted to say.
The only thing I would say is I'm gonna just plug somebody else. Just if you ever want to hear a comical side on stocks, just look up Sad Money. They have a podcast on Instagram. It's literally just called Sad Money. I don't have the at sign, but I'm sure if you just search that, it would come up. But it's it's not financial advice. It's just two stand-up comics riffing off of it. I don't know if I'm allowed to do that, but just wanted to help a friend out. So
You're fine. You're fine. I'm gonna go check it out. Baron, anything?
Thanks a lot for letting me speak. Thanks.
Oh,
Great
thanks a lot for
spaces.
your insights as usual. Optimus?
Thanks.
Happy new 100 and whatever week low.
Yay! Okay. All right. We'll run one of these later this week. Thank you, everyone, for joining.